Welcome to Money on Tap. Money on Tap, your personal finance headquarters, where we bring out the professionals' experience and some fun in what we call three-dimensional investing, utilizing insurance, brokerage, and fee-based planning. That's what we do on this show. We look at all sides of the issues, and we bring a fully independent planning perspective to the table.
Welcome back. You are listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. My name is Seth Crustman here with, you are the one and only, aren't you? Ben Brayshaw and Dan Mickelin. Gosh, you guys look good today. I hope you're feeling as good as you look.
That would be affirmative, Seth. Dan, I don't think that counts for you.
Well, I hope I'm looking good. Definitely feeling good. But I think this is, it's just that time of year. You get that bounce in the step. Summer's about to begin. Weather's been good.
About last week, it was on. It was 90 degrees, and you were catching up from the months of slumber that you guys abide in New England.
Yeah, it is. It's good when the snow's gone, the grass is green. It's just great time of year. Loving it.
My mom used to phrase the frozen chosen from New England. The frozen chosen. You come out of that thaw, Seth, and it's brutal. It's brutal. It's everyone. Forget it. Between July 1st, fourth weekend to like end of August, don't try calling anyone. The only time you're going to get together with somebody is if it's a party. So,
nobody knows a thing about partying in New England, do they?
No, but I'm just saying it's like everyone hibernates for 6 months and then they come out and it's like, and then you're exhausted because you spent the moment.
I mean, I'm pale pretty much all year round, but the skin tone now it's like bright white. I'm extremely pale at this moment, so we got to do something about that.
Well, I'm excited for you too. I love the time of year, and this is a great show for you guys to be a part of with us here at Money on Tap. Hey, first of all, thank you for subscribing. Thank you for reaching out, and thank you for connecting with us here at Money on Tap. If you're wondering what we're doing here and what this podcast is all about, well, guess what? 3 financial planners got a couple microphones and got a shot at a radio station and went for it. And there you go. You got Money on Tap, where we basically said, let's pull back the curtains on what's going on in the financial world and financial planning. And, and really have some fun with it. We talk about three-dimensional investing, which for us really is taking a look at all sides of the aspect. And when we have an opportunity to sit down with our clients, you are the most important person in the room, and what we do is we bring the whole industry to bear for you to accomplish your goals. And that involves a lot of great conversations along that path and that journey, and that's what we're here to share with you today. A part of what we get an opportunity to take a look through or into is taxes, right? And that's really a huge part of our industry and how we help our clients. It's almost the first and it is the first and the foremost, right? We're always making sure that we have a couple of years of taxes to go be able to take a look through, because all finances run through, guess who? Oh my gosh, you guys are awake and alive and alert this morning. Listen to you Money on Tappers out there. The IRS, you got it. That's right. Everybody gets down with the IRS, whether you like it or not. So we're gonna be talking about that today. The IRS is coming, and here's how you change the story there and make sure that they are not on the radar.
Well, this is an important conversation for a lot of people, because you know what? Like you said, Seth, the one thing that we focus on the most is tax incentive planning. We literally know that every penny gets evaluated, it gets reviewed, it gets considered by the IRS. there's only a few small areas in which the IRS does not get involved. And yeah, we intentionally try to exploit those in the most healthy, responsible way we possibly can. And then
healthy, responsible exploitation
of the IRS.
Is that
yes.
Of the IRS? Oh, yes, of the IRS.
Of course, Seth. Of course. So, I think the thing that a lot of people don't understand is that you have a choice. You have a choice to plan, or you have a choice to just go the road that they've already paid for you. And if you don't do the planning, you don't go through the process, then ultimately the returns that you're hoping to make in the market are all depleted very quickly in ways at percentages sometimes you never thought were going to happen to you because you made a mistake or you didn't know the rules or you wouldn't have done it that way if someone had told you. Like, oh, I wish I knew. Today, we're going to lay out a lot of information of things so that you can say, I knew that, and that's why I did this.
The whole notion of taxes, I think, is the epitome of that, like every little bit counts type of analogy, right? Every year when you file, if you skip this deduction, miss that little bit, couple percentage points here or there, the things that you don't take advantage of, considering you go through this exercise every year, by the end of it all, when you're looking back, getting ready for retirement, chances are there's a really substantial amount of money and opportunity that maybe has gone to waste or has simply been paid out in taxes that just did not need to be with some proper planning done earlier on. So that's one of those just huge elements of the story, this path that we all take in our financial lives, that you really want to mind those steps. Pay attention to the details.
You got it there. And yesterday, as a matter of fact, I was listening to a podcast, and the person said on that podcast, really, there's only one thing you do not make a decision about, and it's an inevitability of life. And this is something that gets tied in a lot with this topic, and that's death. Right? It is the end goal. And that's the only thing you don't really truly have a decision about at all. It's the inevitability. But everything else in life is a decision, and we appreciate your decision to improve your life and your understanding here of finances with us, and we embrace that, and we do not want to treat that. We have fun, right? We're having a good time while we're doing this.
Seth, were you re-listening to my portion of the podcast from the previous week? Is that what you were doing?
It was your voicemail the other day, as a matter of fact. I thought it was a podcast, but Ben was like, you know what? There's something that's going to happen.
I like the fact that you go back to re-listen to my statements of wisdom.
Yes, I treasure everything that you say, Ben. Hey, speaking of treasures, we treasure you, and I was getting down to the heart of the matter that we really do appreciate you guys being with us on Money on Tap. It means a lot to us. It does, and we're going to try to make your time as valuable, respect your time as much as possible, and make it a valuable hour with us today, and one that you invest in, and are, you know what? You're going to be on the other side of this, and you're going to be really grateful that you spent this time with us today. So the show is The IRS is Coming, and here's how you can change the story and keep them off of your radar. With that, it's time for Money in the News.
First up today, coming to us from Ariel Zibler at the New York Post. Vivek Ramaswamy demands BuzzFeed hire Bill Maher, Tucker Carlson, Charles Barkley, and Aaron Rodgers. I thought this was a really interesting story because this is another one of those, it's a kind of a pop cultural thing with some really iconic names he's hoping to bring in, but it's also bringing in a little bit of this kind of corporate takeover and these, activist board members that we hear about that, affect us in the investment world. And what it comes down to here is the former presidential candidate, Vivek. We all saw him in the debates, I'm sure. But he has taken up an 8.3% ownership position in BuzzFeed, which is a digital marketing company, digital media company that is, essentially it's a news and entertainment source that, covers the full gamut of things. But, what he's done with his 8.3% stake is come in and make some immediate demands to bring in some new personalities, and kind of rattling off the list there of people he's looking to bring in. There's certainly a conservative lean there. And he's trying to, clean up the image that he has anyway of this organization as being another liberal media, access a source point of information, and he's looking for a little bit more of a kind of an even approach to that. But there's some big names here, and I thought that was exciting. I thought that was interesting. Because a few of these folks that I enjoy listening to, and I think could be to get them kind of all into one organization would offer a real diversity of thought, which is something that you don't typically find.
Yeah, Vivek Ramaswamy, love this guy. I've really, really, truly enjoyed him. I mean, there's just some people out there right now that have great presence, just a tremendous voice, and the clarity to what they're bringing to the table here and pointing out what's been done in the past, and really how in a media, right? That's really what the organization is BuzzFeed, right? They follow trends in media. If you've never heard of them, that's what they've been doing, and they've been around since 2006, but they've been struggling mightily. But he points out some things that they have just done a horrible job of. If you're, and the media in general, just come on, right? What? Very, very few organizations out there in media today, I would say, actually are doing what media is supposed to do, right? Which is presenting information, hopefully without some kind of a bent to it. Everything's become, releasing the bytes or the information without even vetting it, like the dossier by ex-British spy Christopher Steele that they released in 2017. Unproven allegations, and most of it was proven to be in complete farce. And so much of that, what the media has been doing has been on those on that level, right? Total fabrications, and so with this, I think it's interesting that he's really sees any value in this organization. For one, I'm like, why? What is it about BuzzFeed that holds any promise? Even if you do put the seats in there, is there? I mean, what's the value in it? Maybe he sees another kind of an X where there's actually a platform that is not being censored from one version or another. It's like, hey, if people are going to present salacious material out there, then at least let everybody just go for it. But I hope not. I hope it's one that actually says we're gonna have real media, real news that is vetted and is, I don't know. That's
Seth. I think you're right on. I think really everyone's looking for a level playing field in the news media, because I think everyone knows it's as extreme left as it's ever been. I was just thinking about this. I was reading an article about the Biden's daughter's diary or something, and she just verified that it actually is hers. And I was just thinking, like, the media has done everything but cover this subject. And, if this was, Trump's daughter, they would, whether it was, even if it was false, they would have made a story out of it for, 6 months. And everyone knows that. Everyone knows this is such a biased scenario. The truth is we really need unbiased media. We really need to hear the facts. Like, we really need equal coverage. Like, you need to be able to say, like, the level of corruption in media is so blatantly obvious that if you don't see it, you're missing something. You're not even getting full facts. And I find all of us, you, Seth, Dan, like, we're all reading different news media, trying to find our own level of balance. And the truth is there's so much out there we're not even getting reported on either side. I mean, the idea of that, news person, digging the deep story out, it's like, no, it doesn't happen anymore. It's they push the story they want to push. And, we've seen these videos where you can see CNN, MSNBC, or MSLSD, as you want to call it, any of these media sources, right? It's like they say exactly the same thing, like literally verbatim. You see these memes out there.
Oh, yes. Yeah. No, I've seen that. Yeah.
It's so structured. It's not news. It's just, it's literally brainwashing. And if you think some of these organizations, and I think Vivek, irrelevant of his political stance. I just want fair news. Like, I really want fair news. Like this, it's just like they're all getting bought out by liberal, left wing, whatever. And next thing you know, any sort of normalcy to news reporting just goes out the window, and you get this brainwashing corporate, this is what we're going to report on, whether you like it or not. And these are the words you're going to say. And we're going to say it enough so that you actually have enough viewership believe it. And that's brainwashing.
Yeah, I completely agree with you. And I got to say, it was really fascinating to see some of these names, Bill Maher, Charles Barkley, Aaron Rodgers, Tucker Carlson. They don't hold back at all.
They don't care.
They don't care. Yeah, it was really interesting for me, the Bill Maher, when I started listening to some of what he was saying again. I mean, I couldn't stand the guy for years. Just couldn't even stand listening to him. I mean, he was just a grating personality for one, but then the stuff that he stood for and he said was not at all in line with. And
I know we totally have digressed here. But I would totally invest in a solid news media. I think that's what Vivek's trying to say. I've got a big stake here. I'm looking for equal and fair. I mean, I think from, if you're evaluating who you're going to do business with in the financial world, do you want somebody who knows they have to dig through all this corporate junk that they publish out there, whether it's an investment or news, or do you want somebody who just runs with a gamut of people? It's like you need people to question the norm, because the norm is not really as it seems anymore. I mean, this is not the news media of the 70s or 80s.
Speaking of completely biased news organizations, CNN, thank you so much for getting us this article. Hey, nothing against you here, Brian Mena, who wrote it. It's Americans are expected to splurge on travel this summer again. Yes, it is going to be a record-setting, apparently, according to Brian's the news out here, record-setting season in travel for us.
This is incredible. I mean, 20 years it's been 20 years since they've seen this much travel on Memorial Day weekend. It's out of control. Matter of fact, this was one of the top 10 largest travel days in history regarding airfare. It's pretty remarkable what's going on, and they're actually expecting a significant splurge. Now, I know we've talked about in the past, guys, about the, kind of the post-COVID travel and everything like that. And I don't know if, more people are coming out of the closet with this stuff and saying, I want to travel and I'm done with COVID, or if this is pent-up spending, or if this is just like, I got to make the most of it, you only live life once kind of scenario, and I'm just going to make the best out of every I don't know, but
there was all the vouchers that everybody had to use up, and that was last summer, if I remember correctly. Yeah,
but it continues to be on the rise, and I think this is really interesting. I think that, along with the demographic shift that we've talked about repetitively on the show, where the aging baby boomers and so forth, some of these cruise lines are seeing record numbers of bookings. It's some really interesting stuff going on for travel, and I don't think travel is a bad long-term investment considering the demand. I mean, people have been saving, these baby boomers, this 100 million people out there, 80 million people of just baby boomers have been saving for 40 years to do all this travel. Like, that's one of the big things about retirement is like, oh, I want to travel, I want to see this, I want to see that, I want to see the mausoleums and the whatever. And
the mausoleums?
I don't know. Whatever you hear.
Did you mean museums?
No. But, the thing is like all of these different things that people talk about, it's all pent up. And so we have this kind of, we're trying to shove a square peg through a very small round hole here, and it's blowing up in front of us. And I think long-term travel investment is a real opportunity. How you get there, I don't know. But because we're not a travel leisure focused investment firm, but I do think it's interesting. I know it has played a small role in the ETF space with us, but we're not always focused on hotels and airlines. That can move with the wind. But I do think long term these companies stand to do really, really well.
I think what it is from an investment perspective is I think people have become more interested, and I think it's a combination of the pandemic lockdown and retirees just getting out there and actually retiring. but people in pursuit of experiences. They want to travel, they want to go to the theme parks, they want to stay in hotels, they're eating in restaurants. I mean, these are some of the real drivers of this consumer economy we have right now. And it's, business is booming in these places. And I do think there is, with some reasonable due diligence, there are some investable opportunities there in that space for sure.
Well, that's going to do it for us. And, good for us, going to pat us on the back here. We put a lot of articles out there from CNN when it isn't political. It has to do with travel. We're on both sides here.
Are you saying that CNN is a travel resource now? I think it's a good travel guide.
That might be what their niche needs to be. Maybe they really need to, switch gears a little bit here and start reporting on stuff that is real. You guys, you're listening to Money on Tap. And when we come back, we're going to talk, the IRS is coming, and here's how you can stay off the radar. Don't go anywhere. Smash that subscribe button on the podcast, and make sure you get a hold of us at info@yourmoneyontap.com so we can make sure to send you out some of that Money on Tap drip. We're going to be right back.
Are you ready to take control of your financial future? Look no further than Brayshaw Financial Group. Our team of experienced advisors is dedicated to helping beginners like you build wealth through smart investing strategies. Visit BrayshawFinancial.com today to start your journey toward financial independence. Brayshaw Financial Group, your partner in wealth creation.
Thank you for joining us for Money on Tap. You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. And now, more of this week's show with Ben, Seth, and Dan.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. You know what? Don't worry about that number. Just give me a call right here. 503. I'm just We're talking about the IRS is coming. And here's how you can stay off the radar. And when I read that title, I just think of, you guys in New England. The British are coming. The British are coming. Why? Why would we title this show "The IRS is Coming"? I mean, are they really?
They're always coming, Seth. They're always coming for you. They're coming for every penny you've worked hard for. They're going to tax you on it. Then you're going to die, and they're going to tax you on all the money they taxed you on already again. And they're going to figure out how to tax you again and again and again, and they're never going to stop taxing you. So yes, they are coming. This is a big deal. I'm actually glad we're talking about this topic because I don't think we cover this area as much as we do with our clients and the people we work with. And I know this is a big topic, and there's a lot of information here. So, if you're not working with somebody to do this, you need to call us. I mean, this is where, we can only get a certain amount of information out on the airs and allow people to learn from the basics. But it's the deep dive that really changes the difference between the people who can swim and the people who are barely treading water. And I think that's what we're really trying to get across today is that, this topic is huge. The IRS is coming, last year, the Inflation Reduction Act involved, $80 billion of funding towards new IRS hiring of 87,000 new IRS employees. That funding was later reduced, to $60 billion, just crazy. But, the IRS in the government are not making investments in hiring $60 billion or whatever it ends up being, right? I mean, I don't even know. I don't care about all the political side of this. But they are going to hire an awful lot of people, and they believe that the money they're spending on this will be a large return on investment on their behalf. They believe that they're going to raise well over $200 billion of lost tax dollars. That means the IRS is looking at each one of us like they've never done before, and they have more hands and more eyes to do it. And that means that you need to make sure you're not randomly getting selected. You're not bringing up any unnecessary red flags that you're not. I mean, it doesn't even matter, because the thing is there is so many ramifications to even one communication with the IRS. It's just like you don't even know. You don't even know where you got to go. So the history here is that the IRS is coming. The British are coming. Like they're on their way, and it's a matter of time before we see a massive increase. You're going to talk to friends, and they're going to be like, "Yeah, I was just audited." You're going to talk to another friend, "Oh, I was just audited." You're going to be like, "Wow, this is really becoming a very regular, common practice," and that means there's a lot of preparation around preparing for this type of stuff. And it's not like, hey, we're here just to talk about audits. We're going to talk about just running a good business, which is whether you own your own business or it's just the business of life that you're in, and how to manage that so that you never have to ever forego any sort of reason or question to think that, something astronomically weird is going on that's going to bring people to my doorstep, which is everyone's fear when it comes to this stuff.
Yeah, and speaking of coming to your doorstep, there's 3 ways that the IRS will give you notice that you're going to be audited. They'll either do it, they'll give you notice by mail, but either the audit will be conducted entirely by mail. It can be done in an IRS office, or, that worst case scenario you spoke to, Ben, they will come knocking, and they'll do what they call a field audit, which means your place of business or your home, they'll come there looking for records to get this done. And, one part of the pledges that came, from our government with that massive increase in spending from the IRS is that they weren't going to target anybody, under certain income thresholds, which has been very much in doubt. And one of the issues that gets debated, that's tied closely to that funding is, the IRS believes there's a massive shortfall in the funds they collect, but exactly where do they think those funds exist, and who are they going to go after to get that? And historically speaking, until you hit like the $5 to $10 million threshold of income, less than 1%, less than 0.5% of us generally get caught in that kind of random audit situation. As you approach 5 million to 10 million, it creeps up to 0.75%. And for people who are making 10 million plus, about 2.5% of those folks get audited every year. So, by the old standards, it was kind of tough to find yourself in that position. But, all of us are subject to the quote unquote random audit. But there's definitely always been a lean towards business owners, self-employed, and the wealthy. So when you find yourself in any of those categories, this show is going to be really important for you to kind of listen up and understand some of the things that they're looking for, because to Ben's point earlier, there's a lot more eyes looking than there's ever been before, and that looks like it's going to continue to increase in the short term.
And I think the thing, Dan, that people don't understand about an audit. It's not like they say, hey, we want to talk about what you have. What they actually do, especially for business owners, is they take all your deductions, all your expenses, like obvious expenses you would have, like irrelevant of it, just you name it, anything that's a standard business expense that you write off, whether it was the rental income for your office space. They literally take all of those expenses off of your tax return, and they send you a bill that says pay this amount, as if you have no deductions. And if you disagree with this, please begin to send us information. So you have to start proving everything from start to finish. It's not a negotiation or a conversation or whatever. They want every piece of detail to prove every item to the smallest degree, and they disbelieve everything at first glance. And I'm not being overly negative on this. This is how it works. And the process of this thing is proving every dollar. So it's like, oh, well, here's all our rent expense for our office, and here was the utility bills. Like, you're going to have to actually provide all of those utility bills. You're actually going to have to provide every receipt for every office expense that you had. You're going to have to provide the copy of your lease and the voided checks or the draft payment. I mean, like, you have to literally provide every little piece of documentation. Oh, you bought Sharpie markers last month? Where's the receipt? It's just not as well, here is my QuickBooks file. It's not here is the documentation I gave my CPA. It's, no, where is the proof of the expenditures? And by the way, they will most likely not take your credit card statements as evidence. They want the receipt that says what you purchased. And they can go back for 3 years asking for the detail of information. After 3 years, I believe the way it works is they have to prove there was an error. But for the last 3 years of filing, you have to literally go through the process of providing them with all the information and data. And that's why they say keep 7 years worth of stuff. Always keep at least 7 years worth of stuff. So, you just don't know what's going to happen. But I think it's important for our listeners to know that the demand on an audit, demand on this stuff is so integral that you don't want to, you definitely want to make sure you're not part of the 0.5% or 1% that's currently been historically audited. But, moving forward, it's going to be like 3 or 5% of people are going to be audited. I mean, that's where we're going to, which means like, hey, listen, if 100 people, 5 of them are going to be audited, and that's really a shocking kind of perspective on this stuff. And it's not just business owners, it's everybody. It's everybody.
We got to take a quick break here. We're not going to be gone long. We'll be right back. You can reach us at 855-226-8551 or info@yourmoneyontap.com. I am reminded of Tom Brady, the great one. No, he's not the great one. That's Gretzky. Pardon me, Gretzky. The GOAT, Tom Brady. And when he said to the NFL, hey, if you would have given me that $20 million that you guys spent on the legal fees trying to figure out whether or not I deflated the ball, I would have told you I deflated the ball. So, hey, IRS, all those billions of dollars that you're trying to float out there on the new hires for what? Why would you need to hire so many people to process taxes in a day and time when everything's going towards AI and automation? No, we know. We get it. We know what you're doing. So anyways, with that, we're going to take a quick break. You will want to stick around because guess what? We're going to get into some of these red flags, right? We're going to take this information and hopefully apply it in a way for you that helps you out. Not just if you wind up getting into that audit, but also just staying out of that audit. All right, don't go anywhere. We'll be right back. You're listening to Money on Tap. Hey, Seth Cressman with Brayshaw Financial Group. Are you looking for professional guidance to kickstart your investing journey? Look no further. Brayshaw Financial Advisors, we're here to help you. Our team of experts will provide professional, personalized advice tailored to your financial goals. Visit BrayshawFinancial.com today and schedule your free consultation. Looking forward to seeing you there.
We appreciate you listening to Money on Tap with Ben, Seth, and Dan. You can contact us at 855-226-8551 or email us at info@yourmoneyontap.com. And now, more of this week's program.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. And we are getting into the IRS is coming. Here's how you can stay off the radar. For one, want to let you know, in this show, with the amount of time that we have, it is not possible for us to give you, the listener, the experience that our clients have with how we're working through taxes and all of these different parts and pieces. There's a lot of meat that we're going to be leaving on the bone. And that is one of the privileges that our clients share with us, is to be able to work through these pieces and have the advantage of the specifics inside of their taxes and what things that they can do to try to make sure that they're off the radar. So we appreciate our clients that are here and understand and are listening to that. And if that's not you, you certainly can get a hold of us, and we'd love an opportunity. Maybe we're able to help you out with, what your situation is in a matter of minutes. A lot of the time, that's the way those conversations are. It's just we love to help and we get you the information. And other times, it's a lifelong relationship that we have an opportunity to build with you. So don't want to forget that while we're here with you guys today. There's just going to be a ton of information we can't get to. So give us a call, and love to help you out with that at Brayshaw Financial Group and Money on Tap. And with that, speaking of meat on the bone, Ben, left you with some really great storytelling that I'm looking forward to you getting into for us.
Yeah, I think one of the pieces that we were kind of trying to clarify is why is the IRS hiring all these people? We were talking about the money they're spending on this stuff, and I do, Dan, as you said, I think it's as an investment by our government. Irrelevant of your political slant, both parties are, even if they pretend they're not for it, both of them need to do it because there's a lot of spending on the table, and they have the responsibility of balancing a budget. I talked about how there's a 3-year, kind of look back on making you prove your taxes. That essentially is how it works. I mean, there's other limitations and issues, like if you've defrauded them, that's a different story. But yeah, there's like 7 years of information retention you need to do. There's all these different things. But I really think our government is getting prepared to massively increase taxes over the next 5 and 10 years to deal with all the printed money and the deficit that we're dealing with. To literally, I mean, Biden just proposed $7.5 trillion. I remember when I was a kid, trillion really wasn't a number yet. It was kind of like so big, it's unfathomable. But $7.5 trillion in new taxes. But on top of that, it was $5.5 trillion in new spending. Now, whatever gets through, it's irrelevant. But they are planning that taxes are going to go up, and they need people to manage that. Because as they raise taxes, people are going to become more aggressive about trying to defraud them. And I think that's one of the things. And we're not encouraging anyone to defraud. We're just saying there's certain things to look out for. If you're doing everything right, you can accidentally create red flags that make yourself tremendously vulnerable, because it's not about most of the people who are audited, it's like irrelevant. Like at the end of the day, they walk away and so forth, and it's not a big deal. Maybe they owe a little bit of money, or they owe nothing at all, or they get money back. But every once in a while, they catch somebody who's fraudulent. Even Al Capone was never he was convicted on tax fraud. there are people out there trying to do that, and probably our listeners are not saying, "Hey, I'm listening to this to avoid create tax fraud." That's not what we're talking about today. What we're talking about today are the things that make you unfairly, highlighted by the IRS when you're doing things correctly. And we want to go through those things today because they're gearing up to really review everyone at a way and at a level we've never experienced before in our country. And if that's not, enough of an initiative to get you to really dive into these things, prepare these things. If you're young and you're just listening to our show, these are the things you want to learn so that when you become financially advanced and you're running your own business, you're worried like that, these things are in the back of your mind. These are things to take home for a very long period of time.
Yeah, I think one of the things that is kind of first on that list of potential red flags that a lot of people are engaged in these days is, the whole side hustle market, right? You've got income that you've earned coming in from non-traditional means. It's not your primary job. There isn't necessarily a tax form you're receiving in the mail for this. If you are earning income, or if you are taking on expenses you wish to claim, make sure that you're properly documenting that. Because part of the legislation that's been passed has been for all these banking apps to report transactions into the government at a certain dollar level. And I think that dollar level is kind of up and down, but it's not large. It's somewhere around $500 or $600. So if you have those kinds of transactions occurring electronically, whatever platform you're using is reporting that on your behalf. So the easiest thing for these guys to see in an audit is simply mismatched forms. You're coming in short because you did not file the form. The IRS already has it in hand. They're looking at what they believe your return should look like. They're looking at what you've submitted. There's a discrepancy. You got a problem.
Yeah, so often when we're looking for opportunities inside of the tax code, one of the places that we see, it's just one of the greatest gifts that the tax code has for us to date, is in real estate. there's tremendous opportunity in that. And I know there's shows and shows and shows that we've done on real estate, so we won't get into the details so much there. But there's a lot of ways that real estate can house those opportunities inside the tax code that a lot of people don't understand and think, with a small amount of research and, kind of doing things on their own, that they're going to be reporting and putting those things into place correctly. And we see so many, just, again, these are not intentional. And I don't think that it's kind of an interesting thing where people really do have, that best of intention. They're trying to use the tax code in the way that it's given to them to take advantage of the tax code in these ways. But the IRS will treat it like, it's like you're guilty until proven innocent. And that's a little scary when you now have IRS agents that have guns on them that are coming to basically audit you or have the capacity to operate from a place that nobody else inside of the government really does. It's kind of a very bizarre thing. So we understand, like, hey, this is a little stressful here. What are we talking about? I didn't do anything intentionally over here. I'm not Al Capone. But the things that we want to try to turn that back into for you is to give you that peace of mind that you're going to be okay doing what you're doing. And how we do that, for one, at Brayshaw Financial Group, is we have professionals here that work inside of taxes and the filing taxes and the tax proposals that might be necessary for you to kind of look forward in projecting some of the taxes that you're paying. Yes, you can propose to the IRS and get letters from the IRS saying that these are okay things for you to go ahead and do inside of the tax code. So we have the people here at Brayshaw Financial Group to help you. They're professionals. And any time that we're looking at really trying to ensure somebody's ability to maintain their business, to keep their business, it really comes back to having the professionals, right? This is not, eventually we kind of get out of the DIY, and we need to make sure that we're trying to make those intentional steps with you to avoid these really fairly high probability that you're going to be faced with this at some point or another.
Yeah, I think you guys are both talking about two major topic areas. And, I think as we're talking about even real estate, or we're talking about unreported income, that's really why our government is pushing. And if you don't believe me, pushing to be currency-less. I think we are going to be, it's going to be a coin, FedNow coin, whatever. They don't want you operating in cash because they want to make sure that every dollar and penny is accounted for. So if you go and buy something from somebody at a yard sale, hey, let me transact it electronically, then there's a record, and now you're going to be paying taxes on it. These are all things. This is both from a state level, a federal level. So it's like, hey, you go buy a bike for your son, it's used, you give somebody $20. It's like, oh no, I got to pay sales tax on that now. Those are questions and conversations. Obviously New Hampshire, we don't have sales tax. Oregon, we don't have sales tax. We have a ton of listeners throughout New England and across the country. So there's a complication to all of this stuff where we're used to not paying taxes when you go to a yard sale. But if we lose currency, someone pays, rent in cash, the IRS audits you, they're going to discover that. They're going to discover that. Oh, you've had a tenant there. There's an electric bill. There's a heating bill to that property. Like, who's paying that? They're not stupid. So, you have to really be aware of this stuff. As we go through these different things, it's really the large swings of income, I think, that create the most complexity for the IRS. If you have a really big year in selling something or doing something, or your business takes off one year, and then all of a sudden they're wondering, not that you didn't pay enough, or that you didn't pay enough this year when you had that big swing of income making all this money. They're wondering how many years you've been able to hide it. That's their automatic perspective. And so it's really important that you communicate with the IRS when you actually file your taxes, and talk to your CPA about this and make sure they're putting notes in, business took off this year, landed a very large client, created an unusual income flow. It's important to note those things because they will see that and that will be recognized and be like, oh, well, the person just, actually was prepared for this unusual. They saw it as unusual too. If you just try to let it fly by, but you have these big, number swings, if you work with a CPA, you'll see that they usually will provide you, if you ask them, a 1, 2, 3 year analysis side by side on each category to see if anything is percentage wise way out of whack. And if something is, more than 10% or 5% out of whack, you should be looking at that and saying, why is it significantly different if my net income is the same, or my income is lower but I have less deductions this year? Like what might be going on? And all these things might not make sense. Well, if they don't quite make sense to you, maybe your depreciation schedule's off and causing all sorts of different craziness. Well, the IRS is going to notice that and they say, we don't want to take the time to explain it. We're going to send someone else out and have you explain it to us. And that's what we're talking about, is making sure everything kind of comes together. But those large swings in income are really important, but that brings you to large swings in business losses, which is the opposite side of this.
You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. Hey, thanks for the subscriptions. And when you do that, please make sure to get a hold of us and let us know. We want to send you out some Money on Tap drip. We just love connecting with you guys outside of the show. Clients, not clients. It's just so much fun, you guys. So thanks for being a part of our community. All right, we got to take a quick break. And when we come back, yes, we are going to do some summarization and some key takeaways for you inside of this show, which is the IRS is coming. Yeah. So how? Here's how you can stay off the radar. We'll be right back.
Hey everyone, Dan Mickelon here with Brayshaw Financial. Looking for a hassle-free way to invest? Look no further than Brayshaw Financial Group. With Brayshaw Financial Group, you can start investing with as little as $100, enjoy a user-friendly platform with a diverse range of investment options. Visit Brayshaw Financial Group and start your investment journey today. Brayshaw Financial Group, investing made easy.
You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. And now, more Money on Tap with Ben, Seth, and Dan.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. Yes, we are wrapping up this IRS is coming show, and here's how you can stay off of the radar. We've got a couple other points that we want to touch on briefly before we kind of get into some of the key takeaways here for you, and some contact information for how you can make sure that this is part of your process moving forward.
I was just closing out there, Seth, with business losses. And I think, a lot of people don't realize it's, sometimes they're just trying to be so aggressive on the losses to reduce their taxes that can be, you can have an abnormal loss reduction, deduction process that looks weird against your previous historical ones or doesn't match up with the industry you're even in, which is a kind of a whole complexity piece as well, and so forth. But some people, they start businesses, and the IRS knows that businesses aren't always profitable right off the bat. But if your business isn't profitable for 3 to 5 years and you're still declaring a loss, they're going to probably see that as a big red flag. Like, why would anyone want to lose money 5 years, 8 years in a row? They start looking at that saying, this business is not moving forward. Is this just really are they forging everything just to create losses? So they know that these things exist. And I know, we're rushing through this a little bit. There's so much more stuff. If you guys have not gone through, some of these things are probably obvious to some people, but there's so many more of these things. And, we try to make this palatable for everyone on some level, but the depth of this is important, which is why we have CPAs in our office. We have people who do taxes. They understand this stuff. We work with them. There's synergy inside this stuff. We want to make sure that you're part of the 0.000 whatever percent that ever could potentially get audited. We want it to be solid. But like charitable deductions, a lot of our listeners who are Christian people who give regularly and they feel called to give, well, you know what? That could be a big red flag, especially if your income level and how much you give don't match up with the statistics of those in the same income level. And there's ways to mitigate that too, because that's a big issue. And you have to be careful. With cash, you can donate 60% of your adjusted gross income, but if you're you're capped at 30% for like if you're donating appreciated stocks or property, but they'll look at this stuff and say, hey, somebody else that makes this money, the average person's giving, $2,000 and this person's doing $20,000. And so there's ways to communicate that to the IRS and even forward copies of your receipts to the church, to that, have those things submitted with your application just to say, hey, listen, we know our charitable giving is high and we're doing something intentional. We're supporting a missionary or a mission program or somebody's launching a missionary. This is something we felt called to do. You can actually send in documentation on that just to create that red flag to just go away. And like, here's the actual receipt, IRS, for that. So those are things that, go through that process. And a number of the red flags, we don't have enough. The list is long. I'm looking at what we had for the show. There's no way we're covering all this.
I think a key to this all is always, we advise people to work with professionals. Right. I think it's a good idea to use a professional to file your taxes, work with a CPA. But if you are doing it on your own, one tip may be to file electronically, which will eliminate some of the potential math errors. So that's a step in the right direction. And if kind of worst case scenario, you do get notified that you have been audited or the result of the audit suggests that you have a big tax obligation due, keep in mind this, number one, you can pay over time. You don't need to pay that all off right away. Number two, you can make an offer with them. It's called an offer in compromise, where you can offer to pay, right up front something less than what they're hoping for, and they may just settle with you. And if you disagree with the information, there is a process there as well, where you just kind of essentially reopen the audit, and that's an opportunity where you really do need a professional on your side. But you can make the case against some of their findings and potentially find some relief for yourself that way as well.
That is all fantastic. I'm sure you're all excited about not going into an audit this season and the things that you can do to make sure that you don't have to. There's something that I just realized we did not get in there that people may not realize as far as the professional services. There are services and people that will come in and do an audit for you, right? So you can actually have a self-audit so you're aware of what those findings could be. And a lot of the time, the people that are providing those services have worked for the IRS and audits and know very, very well what those things can look like.
And that's a great idea. And I just, the worst thing about an audit, especially for a business owner, is, and I think Dan phrased this as earlier, it was like, you might as well put up a closed sign. It is that overwhelming. You're going to be, because you're the only person who knows your business that well. And it's literally stunts your ability to perform. And I think getting some help like that pre-world as your business grows probably makes a lot of sense for people. Good idea.
Yeah. Well, as you have been going about your day, I don't know, maybe this time of year you guys were picking strawberries while listening to the podcast or, doing something else. We appreciate that you spent this time here with us. You have invested in yourself and your family and your future by being here with us today. So great job. We hope you've had some fun. It's been a great show for us here today to actually, we've done a fair amount of laughing and told some fun stories. I mean, where else are you going to get that where you're talking about preparing for an audit or avoiding an audit? The tax man, that's common. So with that, you guys, just thank you so much. We cannot wait to connect with you. Be successful in your investing. Take this show. Oh, hey, here's one. in terms of the generosity that we know that you guys are all participating in and believing in, one of the best ways you can be generous is to share Money on Tap with somebody that you love and you care about, so that they can get on the inside and continue to grow and make some great decisions to be successful in their investing. Make it a great week. We cannot wait to be back here with you next week. See you soon.
The views expressed are not necessarily the opinion of this radio station and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. No strategy, product, material, or tool mentioned can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information, products, materials, or tools mentioned should be relied upon when coordinated with individual professional advice. Past performance is not a guarantee of future results. This show may be subsidized in whole or in part by a product sponsor or issuer. Securities and advisory services offered through Osaic Wealth Incorporated, member FINRA SIPC, and a registered investment advisor. All other services offered through Brayshaw Financial Group LLC are independent of Osaic Wealth Incorporated. Osaic Wealth Incorporated and Brayshaw Financial Group do not provide tax or legal advice. Main office is located at 116 South River Road, Bedford, New Hampshire 03110, and can be reached at toll-free 855-226-8551.